Welcome back to Harry Levine Insurance on YouTube. I'm Jason Levine and I'm here to talk to you today about dwelling fire insurance. A lot of people don't know the difference, nor should they, between homeowners coverage and dwelling fire insurance. The two types of policies are actually very similar. The principal difference is in the design. Homeowners insurance is for just that, a homeowner, typically someone who has a primary residence or a secondary or seasonal property. Dwelling fire insurance is usually used, though not exclusively, for homes that are rented out to a tenant. So don't think of it as renter's insurance, that's a whole nother ballgame, but it is insurance for a home that is rented to a third party, your investment property, so to speak. So what are the differences between homeowners insurance and dwelling fire insurance? There are a few, but principally speaking, a dwelling fire policy provides much less personal property coverage. Your homeowner's policy provides coverage for everything that would fall out of your house if you took the roof off, turned the home upside down, and gave it a good shake. For instance, your clothing, your TV, furniture, things like that. Appliances too. So on a dwelling fire policy, typically we see a limit as low as even zero, but somewhere between $5,000 to $10,000. That's because that limit for personal property is aimed at covering things like the washer, dryer, oven, range, microwave that are typically provided by the landlord or the investor who owns the property. On a homeowner's policy, when we're covering all of that stuff plus all your goodies and gadgets, we typically see a limit that's built in somewhere between 40 and 75% of the coverage A limit. Whoa, hold on. Coverage A, what's that you're saying? That is insurance lingo, and unfortunately, our industry is phenomenal at word vomiting lingo right at you. Coverage A is a fancy way for us to talk about the building value that is insured. So in other words, if it would cost $250,000 to reconstruct your home that you own, that's your coverage A amount, $250,000. It's important to remember that coverage A does not take into account neighborhood intrinsic value or the value of your land. We're literally talking about just putting the building back the way it was if, God forbid, it was damaged or completely destroyed. So doesn't matter what school district you're in, doesn't matter how big your piece of land is. It's all about the building, and that's coverage A. What does it cost to put it back? So let's talk a little bit more about dwelling fire versus homeowners. Another principal difference is you'll notice a coverage on homeowners called loss of use. This coverage is designed to pay for hotel rooms, food receipts, things like that, if you're unable to live in your home due to a covered cause of loss or a claim that the policy does cover. On a dwelling fire policy for those rental properties, remember, you'll often find that coverage called loss of rental value. What that means is you will actually be eligible within the bounds of your specific policy to receive rent as if it was coming from your tenant, but from your insurance company, again, only if the property has to be vacated because of a loss or a claim that's covered by the policy. That's why dwelling fire insurance is often a little bit less expensive than homeowners insurance. It's dealing with a few coverages that are quite similar to homeowners, but then those principal differences kick in, primarily in the property values, the personal property values, which can often differ by hundreds of thousands of dollars. So there you have it. A homeowner, well, that's for the place you live or the place you call home on a secondary or seasonal basis. Dwelling fire insurance, in almost all cases, and there are exceptions, dwelling fire insurance is for that rental property that you've got a tenant in. So what are the exceptions to when a dwelling fire policy might be used, say, on a homeowner's? Well, unfortunately, as can be the case here in Florida, particularly in South Florida, in the Miami, Palm Beach, and Fort Lauderdale areas, the market can sometimes constrict. There can be very little coverage available, and what is available is only at very high prices. So that's when a dwelling fire policy could actually be used for a principal residence, the place where you live as the owner. Another situation is if you've had a series of claims, some companies, because the dwelling fire insurance is more restrictive when it comes to coverage than a homeowner's policy, can actually be used so that you can have some insurance instead of none if you become ineligible for typical homeowner's insurance. Stay tuned for our next couple of episodes where you'll continue to learn about some awesome tips and tricks about all kinds of insurance. And don't forget, click subscribe now to the Harry Levine Insurance YouTube channel. You never know what exciting content's going to come up next, and I promise we're not just going to bore you with insurance stuff. There'll be some fun times ahead. Thanks a lot, guys.